Greetings. Happy Friday. This is Dr. Jeffrey Scott coming to you from Berlin, Germany with my Market MRI Pro update for the market ending on Thursday, 10/16/2025. Because of time zones, I'm going to be doing it before you wake up, but it's going to say 17th on the timestamp. Again, Jeffrey Scott, Market MRI Pro at gmail.com. My Google group is called Top Down Trader. And my website, which is under construction, is called marketmripro.com. I titled today, reminding myself of my mentor Ian Woodward, standing in front of the room in Palos Verdes Estate, doing his interpretation of Kenny Rogers singing "Know When to Hold 'Em, Know When to Fold 'Em." And I think this rally off the April 7th lows that I put out a video on April 7th, that the bottom was in. Maybe I should be putting one saying I think we've seen the top. So know when to hold them, know when to fold them, and let's take a look at the markets. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of this video and all my videos is to demonstrate how I use the tools that I've created or have been created for me to do top-down analysis in an efficient way. Trading involves risk. You and owner are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mentioned. Trading stocks and options should be considered risky, should always be consulted with financial advisors. I am not. I am a physician. I'm a cancer doctor. I'm at a cancer meeting. I've just got 30 years experience trading as an individual investor, and I like to share some pearls of wisdom with you on a daily basis. And I have tools in multiple platforms. My Google group is called Top Down Trader. I was tempted just to put a note in there and not do a video today. I've got a lot of meetings going on here, but you know what? I'm addicted to my videos, so hope you like them. Top Down Trader user group, just go to Google group, go to all groups, search for Top Down Trader, and let us know how you want to be contacted. Um, Sunday's the deadline for the live participation in my Palm Beach Gardens meeting, October 26th through 27th, so 1 week away from this weekend. If you have interest, just email me at marketmripro@gmail.com. I can confirm if there's a space in the room still available, and if not, I have online. I'm not going to say the online seats are limited, but because they're not. But I can only support so many people in that room. Plus, the reality is I want to have personalized attention, so I don't want to have too many people online that I can't give the same attention to. Know your news and earnings. So last night there were some earnings. It didn't seem like a lot of big movers. Um, but the big story is still the yellow arrows, which is data that we should have that we're not going to get unless the government opens, since I left on a plane yesterday, which I don't think so. So a lot of data that we're still not seeing. From an earnings perspective, I'm doing this, I guess it's probably about 4 a.m. Eastern Time, 10 a.m. here in Berlin. Amex probably the big one that opens up. Judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information about anything that I talk about, any of the tools that I use, just reach out to me at marketmripro@gmail.com. If you own the tool and you have any type of questions about how to use the tool, different things from a perspective of installation, or you're getting any glitches, programmer partner Praveen is available at coding@marketmripro.com. So, hopefully see some of you in Florida. Here is the daily briefing. So you could see volatility was up 9%, closing at the high of the day. While if you look at the ETFs for the market, really not down much, 0.37, 0.4, 0.68, and 0.68. But you can see all of them finishing in the lower third of their daily range. The Russell leading to the downside, and clearly the worst. Dollar was down 0.4, but you could see the Russell was down 2%. Had been leading, and you could see over the last 5 days, the only thing doing better, well, nothing's really doing better than the Russell, and it's down 0.3 is volatility. And you can see Bitcoin continues its downward spiral. I guess gold is the new Bitcoin. Bitcoin was down there 2.75 and is down over the last 5 days over 10%. Ouch. If we look at new highs minus new lows, we're still staying positive at 52 weeks on the NYSE and on the NASDAQ. The numbers are creeping up on the new lows and creeping down on the new highs. If we look at the S&P 500 sectors and we look at one-day performance, you could see, first of all, the only things that were not red were tech and healthcare. Kind of interesting that that's the case. If you look at the big things to the downside, financials, energies, and utilities. I think as I looked at a number of different stocks when I got off the plane, it really looked like there was sort of a data center day where uranium stocks were weak and a lot of the plays that have gotten crazy. Um, some of the meme stocks, the quantum stocks, took a big hit. It looks like in the pre-markets they may take another hit today. If we look over here, you can see very poor participation. Number of sectors, this is S&P 1500, the NASDAQ, and NYSE. Only one sector was up in each of these different indexes. Most of the industries were down. And if you look at stocks, 28% are up in the S&P 1500, 24% in the NASDAQ, and 26% in the NYSE. Let's just flip this around. What was the leaders to the downside? And this is what might be a little bit worrisome. Um, Marijuana, I don't pay attention to. It's so volatile and so cheap stocks that they're up and down. But blockchain, uranium, clean tech, fintech, oil producers, solar, leisure entertainment, MLPs, retail, copper, millennials, metal and mining, cybersecurity, things that have been leading were leading to the downside. And you could see everyone, those had at least 1% down. If we go to the timing model, you'd expect it to be deteriorating, and it has. And we could see on the daily model that the only thing that's holding up in a buy, excuse me, right now is the Russell, and it's tenuous. If we trade below 243.73 today on the Russell, it will switch to a sell as well. So our short-term timing model is sell. Our weekly model has remained in a buy model, and let's see if there's any pressure there. Here's the weekly model, and you could see dojis on the weekly bars, which is kind of interesting. But the the bongos and the buy sell signals on the weekly bars are still showing it's okay to be long this market. So long term trends are intact. Long term it's okay to be thinking to the long side, but short term we're seeing some pretty significant deterioration. If I look at the US index ETFs, and let's blow them up quickly one at a time. Have we changed our tune? Well, my target was the 50. And the other thing that I've been watching is I don't want to see the markets go below that line. And so we are still above the 50, but we're going to, looks like, open up lower. That 50 is going to be in question. I think that is the line in the sand. To break below that 50, you need to really be thinking about why are you holding longs. However, I've pruned my longs, I've added to my shorts and contra ETFs, and I bought protective puts because I am concerned about this market. Plus, it seems whenever I travel and can't pay as much attention, my portfolio usually goes down. So I was front running that. If we look at the Qs, really the same story exists. Draw that line in there. Have we broken down? No, we've just broken through the 17. Again, as long as we stay above the 50 and above that line, we're probably okay. But I think that's going to be pressured. If we look at the diamonds, and when I say okay, I'm thinking for the intermediate and long term. Short term, the market feels like it wants to go lower. Same story can be made on the diamonds, above the 50, but getting close, and above that line in the sand. If I look at the Russell, low close doji and the verbiage of John Person, as we had a doji here and the low close below the low that day within X bars. I'll let you figure out what the X is because it's his signal, not mine. But you could see this line hit here, here, a bit of resistance here on the way up. As long as we stay above that line, we haven't broken trend per se, but and we're actually still above the 17 on the Russell. But my expectation is to come back and visit that line, and we'll see if that line holds. If we look at volatility, you'd certainly be expecting volatility to be rising, and what a strong day for volatility, up 19.91 looking at the VIX futures. Now, one of the things that I've been talking about is, as every other person who puts out videos, is the VIX has not come back down to where it was basing, and that's something that's probably a bearish signal. So the VIX is up, and that's when the VIX is high, it's time to buy. When it gets up to these extreme ranges, when it's low, it's time to be careful. And the worst time is when it transitions from a low to a high. And we are transitioning from a low to a high, so that's concerning as well. And then if we look at the dollar's faltered as the markets weakened, and no shocker, it faltered at the 200, heading back towards the potential 50-day moving average. So markets are not strong here by any means. They haven't rolled over. Maybe I'm hanging the crepes too early. I just feel like short term we're going to see more pressure. If we look at the commodities, I made the comment jokingly that Bitcoin, well, gold is the new Bitcoin, and look at gold. Seems to me like it's getting on a climax run, up another 2.33. I did book some profits in my GLD, not because I don't think it's going higher. It's because when it goes lower, you're going to see a big bar, and I wanted to take some profits off before I didn't have any access to them. Does it mean it's going lower? No, I'm probably selling too early. I kept a position on. I still have some individual gold miners, but boy, gold has been on fire, up on Thursday, another 2.33%. If we look at silver, silver definitely looks like it's in a squeeze as well. It's setting an all-time high, which God, it took forever to break the 2011 Hunt Brothers mania high of silver. Silver was up again, like gold here, 1.72%. Where what glitters are the metals, what doesn't glitter is black gold as oil continues to dive further below the 200, and natural gas is still dead to me. Weak markets, fear, bonds go higher, rates go lower. So you can see the rates were down 1.63 on the 10 years, a little bit over 1% on the 30. If we go further and we look at the buckets, buckets got weaker. You could see we're starting to build stocks up below 12% of the stocks, the NYSE, are below their Bollinger Bands. It is as high as 16% on the S&P 1500, 16% on the Russell 2000, and 13% on the NASDAQ. Those are not reversal numbers, but that tells me how weak the market is. Clearly what I would call a left shift, where you see more bars, higher bars to the left than to the right, calling out the weakness in the U.S. markets. If we put my market breadth tool on, you'll see I like to say heed the Hindy. Well, we got Hindys all over the place. We've had 5 Hindys in the last 6 days. That tells me it's time to be careful. Extremely careful. Does that mean we're going to break down and collapse today and Friday? We could. Is it going to be Monday? October is known for that. Are we done going down and we're going to rally? That could happen too, but when you see that many Hindis, you look for markets to pull back. You haven't had a major correction without Hindenburgs, but most of them are just going to be modest pullbacks. Um, you know, it's bothersome that we made new highs and things like that. It makes you think that these early Hindis are not mattering, but I heed the Hindi, and the Hindis right now tell me to be very careful. You can see stocks above the 20 in green, 50 in white, and red 200 moving average are dropping as this market weakens. New high, new lows are still holding, which is remarkable. You could see going back to the left, we've had more new highs than new lows on both the NYSE on the left and the NASDAQ on the right for quite some time. No new signals below except for that Hindenburg omen. AD lines negative up down volume, and you could see just like on some of the other indices, we had a sharp rally off of the 50, and then we've pulled back hard on Thursday on both the NYSE and the NASDAQ. These are the big guys, the composites. If I look at my extended market breadth tool, and again, I showed people how to create this. If they're not out there yet, they will be pushed this weekend, which are these. This is the indicator set. You just create a chart that has the NASDAQ composite with this IXIC, and you put those indicators on it, and you'll get the same picture as mine. But basically, no signals yet. Clearly, we have weakness. ADs have turned down, RSIs have turned down, stocks above the moving averages, even the 13-week new high, new low, adding to the feeling that we are, not saying we've topped forever, but we've probably got a short-term top in, and some more weakness might be anticipated. If we go and we look at the JAS layout model, get a sense of what's working, we'll take my universe of about 3,800 stocks, all in sectors and industry groups. And and you can see what was up on the day. The only thing up in the broad sectors for me was healthcare. It's interesting that in the S&P 500 tech was up, but overall in the broader perspective, tech was down. So healthcare was the only thing up. Let's just look at healthcare tonight. And let's just take, I've just been informed by my wife that I am boring as hell doing these videos. Sorry about that. If you don't, she can't just hit the pause and walk away, but you can. All right, so I've ranked the healthcare stocks by percentage change, at least the industry groups, and so let's just take the top 5. So the cool thing is that we're able to build top-down perspective, the leading sector, the leading industry groups in that sector. Somehow, because biotech is massive, 630 stocks. Let's filter out low volume and low price stocks. And we are left with, hit OK, 243. Let's rank them. I like this short-term momentum, FM2. Let's just look at some of these stocks. PRAX, well, something happened to it yesterday, unless it was a reverse split. Let's see. Public offering, so is that. Genetic. All right, so okay, so welcome to Biotech 101. On October 16th, they released some very positive news on trials. And what do they do after hours? They then announced after hours a secondary. This is what I would have done too if I was at this company. You know, you go into the day, your stock is trading at $50. The day ended with the stock trading at $150, and then you do a secondary offering, which raises cash at a high valuation, which is likely to come back. And it's actually great for existing shareholders to do that. APLM, take a look at that one. All right, so APLM had a strong day on, Wednesday, Thursday, and Friday. It's run from 750 up to almost 20 on the close. Continue listing. All right, so this is a stock. It was up because they said they're not going under. Not the kind I want to be buying. Grail is interesting. This is a spinoff of Illumina, and this is a stock that will do diagnostic testing to help you understand if you are at risk for cancer, and could lead a number of diagnostic tests to see if you have an underlying cancer. Breaking out here, was it on earnings or was it on news? 11:11. Nope, not on new earnings. So we can always flip over here to the news button. And I just love the fact that I could pull and see. They found financial backers for move into new markets. So Samsung coming in with money. All right, so that's a speculative reason to buy a stock. OMER. We'll point out a lot of these companies have cancer-related stories. The reason why I'm in Berlin is because of the European Society of Medical Oncology. So I'm looking for anything that looks actionable here. This is one that does. This has been a huge leader, ALNY. It's got fundamentals that are showing earnings coming in on a big drug approval. You could see it's got revenue, some growth. A lot of surprises. Earnings are 10.30, but you're looking at $1.71 versus a loss of 50 cents. If they hit their number, you'd expect this stock to rocket. So this is ALNY. Obviously, it's already had a pretty big move. Thermo Scientific, another in the testing industry, a big breakout pullback. Looks like it's ready to run again. I'm not going to show you a lot of longs today that I want to buy because I think this market's going to be under pressure and a bad market will pull everything down with it. But that's how I approach top down. The other thing to do is bottoms up. So I hit that little arrow, go to the impulse, and you'll see there's my universe. Let me open up all the take off my filters. There's 3972 stocks made my filter, which means you're in the NYSE, the Amex, or the NASDAQ, and you're above $1 in 100,000 shares. And let me just show you my favorite ways to look from a top-down, from a bottoms-up perspective. The A+ scan, I'll talk about it after I open it up. Look at AMX, there's a telecommunication stock, XUS. Before I go into it, it pays a 3.37% dividend, had some good earnings growth in the last quarter and the quarter before. Revenue is kind of flattish. Safety play. If these markets hold up, some of these dividend-paying communication stocks do well. To reach this scan, you have to be above a price and volume. You have to have these two blue momentum dots in a row, which are the first set of dots above the squeeze line. You have to have your relative strength versus the spider breaking out above the moving average, and you have to have your OBV above its moving average. So AMX meets that. ASX, technology play, a little bit of a breakout, lower cost stock. And again, they're going to have the two blue dots, relative strength and OBV. These stocks have been some of the best movers, even some that I don't even like their name because I know their story, and their stocks break out after this signal. So Suity, I guess. Big gap up here. You might want to go back and look at the news. Blink and you missed it. Strong phase 3 data in hormone positive breast cancer affirming commercial potential. Well, that is a reason to buy a stock. And that's what we're seeing here as it's moved up here. This must have been when the data release came out. Breaking above the 50 with the momentum, relative strength, and OBV. If I had to buy something in healthcare today, that would look interesting. CYRX, nice uptrend. EGO is one of the miners that I own. I've added to it on this move up here, and you could see a breakout today. It's got interesting. It doesn't. Yeah, that's right there. Is the two momentum dots. Relative strength and OBV look good. Goldfields is another what used to be a low cost, as was EGO. Gold miner, which has more than doubled. Similar pattern as EGO. PRAX. This must be on news. That looks like one. Is that the one we looked at? Oh yeah, this is the one that had good positive news, and then is doing a secondary. REXR, a REIT, industrial REIT, pulled back to the 50 in a breakout. TNK, the shipping stock, and let's just look at, pays a 7.5% dividend, good earnings. So even in a land of a bad market, the right kind of scans can help you find stocks that have potential to do well. The other place I like to look is let me kill that one, is the A scan, and this one's a little different for those who have watched me for 20 years. This is my scan to look for stocks that are pullbacks in an uptrend. Here's your pullback with a new breakout. Here's from a squeeze, which is that yellow line with the same relative strength and OBV. COHR, I think that's an LED company. Here's that CYRX again. EPAC, yeah, not so. GTLB. So all of these have to have had this recent pullback and then a breakout. And they had to have the squeeze. That's Hologics, Hub Group. Not a lot of these today. OLED, this one looks very interesting. Breaking out here. If they can hold this breakout, let me see if we've got. Yeah, breaking out of that trend line, and then here's that REXR again. That's how I look at the market. This has been 24 minutes. You take out my talking, it would have been an 18-minute top-down review. I am not advocating longs here. I think we can be careful. If you feel like you want to go long, I might be looking at these two scans. And then I just want to show you how things have changed on some of the contra ETFs, and then I'm going to do my wife a favor and stop talking. DOG, which goes up if the Dow goes down. If it breaks above the 50, it could get interesting. Not good for the long holders of stocks. SOXS has not broken out yet, so even though I have some contra ETF positions as a safety, they have not broken out. SPXS, this is a split that we have to fix hard to say the chart. SQQQ will go up when the Q goes down. And again, it's moved up off the lows, but we haven't seen a lot of movement. When you start to see something like we saw back here, that's when the market's really in trouble. And the same thing with TZA. So have not been a great place to hide, but that's because the market's up and down. If we have a persistent downtrend, I'll be looking more at them. I do have some right now. You all have a great day today. Be careful. Options expiration. Expect volume and volatility. And if my wife lets me, I'll do a short video over the weekend, which sounds horrible, but this is a vacation for her. Take care, everybody.